In this video, we're going to talk about midweek reversal weekly profile, and I'm also going to show you how I caught a trade on Friday using this profile. So this midweek reversal profile, we expect that Wednesday will form the low of the week. Find Monday and Tuesday, price will just do whatever. Monday will form its high low, Tuesday will also form its high low. Then Wednesday, if it's a bullish weekly candle, Wednesday coming, it will take out all the lows that Monday and Tuesday had created. Then we get that expansion on Thursday and Friday. So now this is an example here. You can see this is a bearish example. You can see Monday and Tuesday we had some sort of an accumulation. Then Wednesday we took out the highs again of Tuesday and Monday. And when price was doing that, we tagged our higher time frame key level of point of interest. So this can be a 4-hour fair value gap, order block, or even a daily or weekly. Just a higher time frame key level. So once price tags it, you can see we get that rejection. Then on Wednesday, Thursday, and Friday is when we get our expansion. There are some weeks where Thursday and Friday is where we get our expansion, and then Wednesday is just a rejection and we close the day like that. So this is an example of a GBP CAD trade that I took on Friday. So you can see this is Monday candle. This is what Monday we had this bullish move. Tuesday, you can see Monday, Tuesday, it was some sort of like a consolidation, even Wednesday. But you can see come Wednesday, we took out Tuesday high and price tagged a higher time frame key level. Here we had a daily fair value gap, and also for our fair value gap was also around the same place. So Wednesday we tagged it and got this rejection and closed the day. Then Thursday and Friday is when we got our expansion lower and closed the weekly candlestick. So this is what it looks like on the 1 hour time frame. You can see on the 1 hour Monday, we have that Tuesday, then come Wednesday, you can see we took out that high, and then Thursday. So by the time I'm coming to my charts on Friday to look at this GBP card pair, already Monday, Tuesday, Wednesday, and Thursday had already printed out. All this price action was already there. The only price action that was not available was the Friday, because Friday is the day I took this trade. So now, at this point, when I saw Wednesday formed this high and Thursday we had this move lower, at this point that confirmed for me, especially when we had this move lower on Thursday, you can see we broke structure to the downside. This was a confirmation for me that chances are high Friday price is likely to expand even lower. And also another thing that made me consider that confirm that price is likely to expand lower on Friday is because price had not yet tagged the previous week low. So this is what the weekly candle. This is the weekly candle that I was trading, and this is the previous weekly candle. You can see the previous weekly candle, the low price had not yet gotten to this low. So it was easier for price to get to this low compared to saying that price will reverse and then we go to these highs here. So I want to tell you something, guys. When you have a previous candlestick, this can be a daily, this can be a weekly, whatever candlestick you have. The next candlestick that prints, only three things are likely to happen. One, you can have a situation where the next candlestick, we take out both the high and the low of the previous candlestick. So this is a situation where we sweep this high and you sweep this low. So that is one situation. Then another situation, you can have a day or a week, whatever, the next candlestick. You can have the next candlestick where we have an inside candlestick. If it's the daily, it becomes the inside day candlestick. If it's the weekly, it's the inside week candlestick. If it's the 4 hour, inside 4 hour candlestick, whatever time frame you're looking at. But the point here is we are comparing the next candlestick in relation to the previous candlestick. So this is situation number 2. Situation number 3, you can find a situation where, so now where we really have, we take out the high and we close above that. You can have that one. Or, because this is so let's say this is a bullish candle. So you have that bullish candle. Or you can also have a situation where the candle just closes here. But the point is we still take out this high here by either wicking or having candle body closes above. Another situation, you can have a bearish candlestick. So you have a situation where we can close below here with a body. That's situation 1. Or we can just wick and have our bodies like that. So those are the only three situations that the next candlestick can do in relation to the previous candlestick. But as you can see in my example that I've just shown you for GBP CAD, this is what we had. So we had not yet gotten to this low here. So chances of price getting to this low for me, I had to take that risk that we are likely to have a week where the candle, that where price will get to this low here. Because again, on that Friday, the BP card, we had a high impact news during a New York session. So because of that high impact news, I knew that was going to drive price further lower, and we were going to expand to this low. Either we take it and close below it, or um we closed inside, that's okay. But the point is, we still expand lower to this sell side liquidity. So Friday during London session, this is where price was when I came to my charts London. So we had, of course, we had this move on Thursday, and then we had some sort of like a correction retracement to this 4 hour fair value gap. Then during London session again, we had this move lower. So this is a 4 hour order block, and also we have this 4 hour fair value gap. So you can see this 4 hour candlestick already tagged. Also, this one already tagged the 4 hour fair value gap. So at this point, it means by the time my London session is starting at 2 a.m., I'm clear to move to the lower time frame, which is 15 minutes, to look for my entry criteria. So this is what it looks like during my London session, kills on time. You can see we had that. So this for me is liquidity sweep. We took out these highs. So that is entry criteria, liquidity sweep. We took out that high. Then we got a market structure shift. You can see this very huge displacement candle that closed below this low here. That's a beautiful market structure shift. Then we had this fair value gap left here, and I did put my sell limit on this fair value gap. You can see there is, I got tagged by price, and price played as it is, as it should. And you can see my target was where this previous week low, and we got there. So I'll show you guys another example of gold. Also gold, we had the same weekly profile. You can see this is Monday, Tuesday, Wednesday. You can see Wednesday we formed the low of the week. We took out Tuesday low, and then now we started expanding Wednesday, Thursday, and Friday. So this gold was also a good trade that you would have taken, because by the time you're coming to your charts on Friday, this is previous week high. The previous week high price had not tagged the previous week high. So price getting to this previous week high was a high probability on Friday. And remember, we only take high probability trades. So this is gold on the 1 hour. You can see by the time Friday, starting Friday, already this high was still intact. Price had not reached there. So during New York session, we had a retracement to this order block, and then we had that move up. And I want you to be very careful. Not every week where Wednesday forms the high or the low of the week, are we going to have the markets, running to the opposite side liquidity. There are some conditions where I would not take such a trade. An example of such a trade is where you come to your charts on Friday and you find price took out maybe the high. Price has already taken out the high of the previous week, and we have not yet taken out the low of this previous week. In such a case, I will not take this trade even if my setup shows up, unless I have a high impact news driver on this pair on that day. That is the only time I can risk that we are likely to have what? That this market we're likely to expand lower and maybe close whichever, either close here or close there. But the point is, that is the only time I'm willing to risk that we're likely to close this weekly candle as a week where we have taken out the previous week high and the previous week low. However, if we had not taken out that high and we had this, just as the way as I've showed you with GBP card, if we had that, I'm willing to risk that this week we are not likely to close as an inside week candlestick. So there's all that. So guys, if you like my way of teaching, kindly subscribe to my channel and also like these videos. That will give me motivation to create more videos. So for that, I want us to look at GBP NZD. You can see GBP NZD, this is Friday, Thursday, Wednesday, Tuesday, Monday. So Monday, Tuesday, Wednesday. So you can clearly see on Wednesday, we formed the high of the week. This is Wednesday. Then we had expansion on Thursday and Friday. But you can see Friday, we did not take out the previous week low. We only took out the previous week high. You can see here, we only took out the previous week high, and the previous week low has been left intact. So by the time I was coming to my charts on Friday, this previous week high had already been taken. And because of that, I did not take GBP NZD trade, even though it gave me a good setup where Wednesday formed the high of the week. On Friday, there was a very nice bearish fair value gap where price tagged and gave me market structure shift. But I did not take that trade simply because I did not trust that this price was going to get to these lows here. So you can see this is GBP NZD. You can see during London session, we got this market structure shift. Beautiful fair value gap here. Price retraced to the fair value gap. But this is how we closed the week. This is the previous week low, which needed to have been your target if you were using that as if you were doing what I've told you guys you're supposed to do. But because we took out the previous week high, I knew very well chances are high that this is a low probability trade setup.